guys. You wrote two of the most recent surveys for the past 2 years.
Yeah, so my background's in payment systems. So before I came to the BIS to work in the Secretariat for the Committee on Payment and Market Infrastructures, I worked at the Bank of England on payment systems and clearing systems. So I'm sort of I'm a central banker, but a bit like Pietro, I survived some crises, and I kept trying to understand what was going wrong. And obviously I didn't do quite as good a job as Pietro because I lost a lot of my hair in the process. But, yeah, no, I've been just trying to work out financial markets, and that's taken me where I am today, and that's working on central bank digital currency.
Very cool. It's a very good, pretty big part of the ecosystem potentially, especially for connecting the traditional financial system to what we've been building out over the past decade. And then Francisco, your LinkedIn was in Italian. Luckily, we have Google Translate and some of the other technologies. And you have a diverse background with VR, IoT, and more recently blockchain. So, what stands out to you about digital assets? Why are you focusing on this right now?
If you look, I'm an Argentinian in Italy, working international, so some base of language and speaking in English. So yes, as you say, I started working in a lot of innovative topics. So I started working in 3D simulation, then I moved to virtual reality, augmented reality, then I'm working on IoT, AI, and now I'm working on blockchain. To be honest, what I see that it's the really interesting thing in the blockchain world is that if you look to the different industries, you see that almost all of them were in some way disrupted. If we look at the telco, WhatsApp, and this kind of a new application, disrupted the business model, the way people interact with each other. If you look to the media, Netflix, and many other infrastructure and applications changed and disrupted totally that industry. Spotify with the audio and music industry, etc. If we look to the financial industry, is one of the, let me say, few industries that are still not disrupted. Now, also, if we look at the automotive, that is one of the last one is now, how can I say, we see a disruption that is arriving, but the financial industry was one of the, let me say, the last ones. So to be disrupted with internet, with social networks, and with what today is becoming the technology enabler for this disruption that it is blockchain and all the infrastructure that are creating. So as well as Pietro said, and also Henry, what I see and what really passionate myself to in this topic is that we are following a topic. We are seeing how a new technology from a technical aspect is starting a disruption in the business, in the regulation, and that will create a huge impact on our lives. And after 10 years following Bitcoin and the first cryptocurrencies, seeing what today is happening with the Cbdc, that it is a consequence of 10 years of work on several steps, first blockchain, then the DLTs, and then ICO, and then DeFi, and et cetera, et cetera, et cetera. Now we are
it's been a long history, and yeah, we'll get to
it. It was a history of 10 years of a lot of mistakes, a lot of hype, a lot of, let me say, a lot of things, of course. But we arrived to a point now with the Cbdc topic that we are close, let me say, to the infrastructure that need to be changed. And
that's a great way for Pietro for segueing. Thank you. That's a great foundation to segue into the topic of traditional financial system versus the digital assets ecosystem. So Pietro, what does the traditional financial infrastructure look like today, and how is the DLT and blockchain infrastructure that we're building out, how does that compare, and how is it potentially more efficient and better?
Yeah, so again, I do not pretend to have a perfect picture of the whole of the financial infrastructure as it is today. I can talk about a couple of things. First of all, history goes on. So the current digital payment and transaction infrastructure has been built end of the 80s, beginning of the 90s, has been conceived at that time. Of course, there has been maintenance, but the design has been done at that time. It works well for many different things. In most countries, the payment system tend to work pretty effectively. The custody business seems to work pretty well. So the point is at which cost and which are the elements that can be somehow fine-tuned or improved with a different type of approach. That's my thing. I have in mind that talking again about my times in the asset management industry, two different things. One is the payment system and the fact that you are a mutual fund, you have 5 different share classes in 5 different currencies. Well, you do your own investment, and the money in, money out from redemptions and subscriptions, and you have to maintain 5 different accounts where your transaction will happen on a bulk system, net end of the day. As of today, real-time gross settlement is possible, and it can be done both in a centralized manner or in a decentralized manner. But of course, this allows a deployment of capital that is more in line with the fiduciary duty of an asset manager. Second thing, custody. One of the costs that go to the detriment of the investor is related to the custody business. Is it needed? Yes, when there is counterparty risk. If we have an infrastructure that allows to minimize that counterparty risk, this can be an improvement. The centralized system can probably help in all that.
Yeah, great. And I did see a comment pop up on the screen basically about some other areas like emerging markets, how it might be able to help connect others to the financial system, or maybe bank the unbanked, and kind of open up cross-border payments potentially.
Yeah, this is another element, of course, the fact of giving a broader financial inclusion, which again will be somehow related also to the fact that this is seen as an infrastructure and not necessarily just a private sector role. At that time, the situation will be much easier to be deployed also in emerging countries and so on.
Yeah, there's a lot more to the story than most on the outside looking in are aware, and that's how early it is as well. That's why there's a lot of opportunities. Now, Marion, basically, you're studying economics. What do you think of tokenomics, which is basically essentially digitizing assets and putting them within DLT environments? Do you view it as an evolution or a revolution? And how could blockchains potentially unlock new capabilities, or is it just more about efficiency and security?
Yeah, I would say probably a combination of both, depending on the sector, the country, the industry. More an evolution for corporate, but still offer the next generation of data management process. So clearly it makes things more efficient, more secure along the supply chain. This clearly increase transparency, which makes speed of payment processing better. It also reduces intermediary expenses, but it can also overcome the issue of fraud and counterfeit products. And this is probably why the pharmaceutical companies like you may have heard Sanofi, Merck have been piloting blockchain products recently. And to build on what Francisco and Pietro mentioned before, it can also be a revolution for emerging countries. For example, if we take the case of the United Nations World Food Program building blockchain initiative, it has helped distribute cash for food aid to more than 100,000 Syrian refugees in Jordan, and the use of blockchain has reduced bank fees by 98%. So I would call it a revolution.
Yeah, that's great. Yeah, I guess it depends upon what geography you're in and kind of what the capabilities and access people have within those jurisdictions. And Henry, this is a good question for you as well. It's very similar to what I just asked Marion. So does blockchain unlock new capabilities, or does it basically just make things more efficient and secure? And I only ask this because, doing my CBDC research and speaking with people from, say, the World Economic Forum, who built a policymaker toolkit for central bank digital currency, they're not so convinced necessarily that DLT is the way or isn't the way. They're kind of agnostic. More so, they think it's more of a policy and a regulatory question rather than the technology itself.
I mean, I suppose it is, but I'd echo Marian's. Oh, pardon me. I'd echo Marian's comments that it depends on the circumstance. So it might be fantastic for some situations and not for others. And what it can do that's different. So we just ran an experiment here in Switzerland with the Swiss National Bank and with the sort of market infrastructure provider. And it's, sorry, I was about to say something a bit naff, but it's quite exciting. But it is quite exciting because a lot of the time with CBDC, you don't necessarily have a clear use case. But in Switzerland, the market infrastructure provider is actually setting up sort of a tokenized central securities depository. It's now all of those securities are settled with central bank money. How could that be done? Well, you could issue central bank money into the DLT platform. That's quite, I was about to say revolutionary. There's a lot of considerations behind that, but you can avoid them just by plugging the existing account-based system into the platform. That works as well, but you don't necessarily get the benefits. So we're just starting out thinking about, well, where's the sweet spot for policy considerations as a central bank, but then at the same time the efficiency of the system. Can you make Pietro happy as an asset manager? That's how I'm going to think of it in the future. So it can do things. You can build different kinds of architecture with DLT than you can with account-based systems. It gives you potentially more options.
Yeah, great. Well, the businesses seem like they're ready. I know Algorand is doing some work with central bank digital currency concepts, as well as I saw that Diem, formerly Libra, in their second version of their white paper, talked about connecting to those networks, as well as MasterCard and Visa are working on some stuff as well. And Francisco, kind of just back to what we asked Pietro before about the traditional financial system infrastructure and the DLT infrastructure that we're building in the digital assets ecosystem. How do they compare? What do you like? What don't you like?
Yeah, well, to be honest, in this comparison, first of all, and also Harry said this, and I totally agree, is that some traditional systems, of course, works well for some specific use cases. And let me say, typically, this is what happened with new technologies that everyone wants to use everywhere and change totally the past, and try to say that the past is not anymore good. And I don't believe on that. I believe that some systems are okay, some also traditional systems. What I see today, and to be honest, let me say one of the best use cases that I see now that it makes really sense for a blockchain infrastructure is the CBDC topic. Maybe not just the domestic CBDC, but a multi-CBDC infrastructure, because typically in that situation, you need you have all, let me say, central banks at the same level. So it's not that easy to have one coordinating everything, or even if it is that one, they don't want to provide all the power to that one. They want to share some responsibilities. They want to still guarantee the decentralization. And from the other side, there are many assets that has to be exchanged in an interoperable way. So that's one of the use cases that I really see that blockchain can create a really difference, that can create something that it is not possible to do, let me say, or if it is possible to do with a centralized solution, it has some risk and some trade-offs. Another important thing I think we have to consider in this topic, that especially traditional systems were not designed with that in mind, is about programmability. So typically, all the traditional systems were designed in a centralized way, but with few features. And if you want to change something, it will require years of work, of standardization, and it is totally, also the programmability is totally centralized in some stakeholders. Well, what blockchain is providing is a totally different approach. It's an approach of an open ecosystem where a group of stakeholders can come and create programs, what are called smart contracts, or we can go in several other ways, but can create on top of that infrastructure. So that becomes, let me say, a general purpose infrastructure where you have the tokens, but then you have all the logic and the programs and the smart contracts that you can put. That's a totally different paradigm. That's something that is totally different with what today the traditional infrastructures are providing. Of course, there are also in this for these some trade-offs of performance, of scalability, etc., but it's just something totally new. So having the possibility for infrastructure, financial infrastructures, to be totally programmable by the stakeholders that are using that infrastructure, and not by one stakeholder that it is owning everything, I think it's one of the biggest changes of what blockchain
there's a flexibility. They're flexible systems, and it also allows for people to really work on things and create some things quite rapidly. I mean, and that's kind of a great way to head over to Pietro for the next question about stablecoins. From our report, we calculated through our data that total stablecoin supply in February of 2021, so just last month, it surpassed $50 billion, and that 8x year over year, which is pretty significant. And I would say that from what Francisco was mentioning, that's a lot of that is because of the openness. And these are just basically tokenized version of fiat currency. Majority of it is denominated in US dollars, 96%. So what are your thoughts on stablecoins, Pietro, and why such explosive growth?
Yeah, no, I will answer with the question. Yes, stable, but stable towards what, right? So the real point is any stable coin can decide an underlying asset to which to be stable, and then the mechanism of how to make it stable can be different. Most of those stable coins are actually private money. So if you want, similar to banking, private bank participants' money, so they are not central bank money, they can be a representation of e-money at the end of the day. So it's pretty interesting that this dynamic goes on, because it shows the need on chain of having something that is related to the ability of issuance that ultimately relies on the central bank. And this goes in the direction, if you want, of the combination of the strengths of an infrastructure and of an institutional framework, which is the one of central banks. That's essentially, to me. Then, of course, you can have a stable coin stable towards an algorithm. It's a completely different story. It's a completely different type of proposition, and you will not see the same amounts in the market.
Oh, totally. Yeah, they're without a doubt.
Peter Dewey mentions commercial bank money. That's what I want to say.
Yeah. Well, those other types that are pegged to algorithms, and then the other ones that are pegged to a different digital asset, they're negligible from a supply standpoint. The majority is tokenized fiat money.
Exactly.
And the majority is USD as of now.
I can see also some elements of potential threat to the institutional framework when we talk about global stable coins, right? Because this would be a way to prevent central banks from doing their work, which is at the end of the day monetary policy and price stability. So.
Yeah, well, we're about to get to quote unquote so-called stable coins with one of the next questions to Henry. But before that, Marion, how do financial institutions view stable coins? Are they looking to get involved on the consumer side and non-bank financial institutions, or are they really trying to use it as wholesale applications between financial institutions?
Yeah, I'm going to recall what Pietro just said. Financial institutions see stablecoins as, obviously having many advantages. It's almost instantaneous, inexpensive, borderless. We have peer-to-peer transfers. It's available 24 hours, 7 days a week. But as Pietro just mentioned, pegs to what? And the main question is, we tend to put all stablecoins in the same basket, but all of them are not the same. We still miss an institutional framework. There are a lot of things that are clearly not decided yet. And obviously, they solve a crucial bottleneck in the area of globalization, which is international cross-border payments. But we have also some threats, monetary policy, framework, and others.
Great, thank you. And then Henry, so-called stablecoins, which I always laugh when I see that, and we put it in our report because that's always what the G7 and the BIS refer to them as. It's almost like it's a taboo word to call it stablecoin without putting so-called in front of it. Why is that, and how do most of the central bankers that you surveyed, because you've had access to many over the past several years to create those surveys, how do they view stablecoins?
Yeah, the so-called comes from cryptocurrencies originally. So when we started writing about cryptocurrencies, we didn't call them cryptocurrencies because they're not currencies, but then everybody got confused about what we were talking about. So we had to call them so-called cryptocurrencies. So it comes, exactly, it's all about the inverted commas. So it comes to so-called stable coins, and it's exactly as Pietro said, you just can't read, you can't believe everything you read on the internet. Stability is a relative concept, and a lot of these stable coins are just not stable. Fine. When it comes to sort of what do central bankers think about stable coins, hand on heart, there is not a sort of a common view, because stable coins sort of, they come in very different flavors. The only one I would sort of point out that's universally loathed is the new unit of account, is the trying to create something new, or not compare like with like. So I had a nice conversation with somebody the other day when they're talking about the power of cross-border payments and how DeFi stablecoins can do cross-border payments instantaneously. It's much better than the current arrangements. And they were talking about just moving a US dollar token from one person to another. I'm like, well, yeah. If you're not doing any foreign exchange and you're not doing any of the sort of anti-money laundering scams and things like that, it's just not like for like. So stablecoins potentially, they're a really great innovation because they're taking something that's already safe, which is a currency, and they're adding a new functionality on top. That's cool. But just because you can do something like create a new unit of account and pass back a load of market risk onto people who don't understand it, doesn't mean you should.
Yeah, wow, that's great. And that's something that I caught on to reading the central bank research for our stablecoin report, that the medium of exchange and the stored value, fine, but just not the unit of account. It seems that's really the thing. So Francisco, we said before that the majority of the stablecoin supply, 94% of it, as of February, was collateralized by fiat, and 99.5% was pegged to the US dollar. How do you see that composition changing over the next 10 to 20 years?
Well, I think that one of the most important things that can happen in the future for the stable coins, because as also Pietro and Harry say, one of the biggest risks of the stable coin is who is behind that stable coin, who is managing the reserve of that stable coin. And that's one of the key points of the stable coins. I think a really big change will arrive when the CBDCs will be there, because that will provide more transparency on the reserves of any kind of stable coin, if they will want to create something separated to the CBDC infrastructures. So a lot of things I think will change when we will have CBDCs that will be behind, so will be the reserve of of the stable coins infrastructure, because at that point there will be a reduced risk on what's the reserve of the stable coins. And in that point, so who will provide the first, let me say, CBDC will have also a big advantage on the stable coins and creating new ones. From the other side, of course, there is also a topic of regulation. So we know that, for example, in Europe, it's not possible to create stable coins with the euro. They are working in the MiCA regulation, and they stop the DM, and they stop a lot of other projects because they don't want that someone starts from a private point of view, creating a coin or stable coin or electronic or digital money, that it is not, let me say, protected and regulated by the regulators. So I think that today stable coins are interesting, are one brick of the Lego of the blockchain world. The stable coins like DM pushed more and more, like Libra or Diem now, push more and more the regulators to answer with the CBDC topic. But I think that after CBDC, especially if CBDC will not be, if some countries will not use a blockchain solution, I think that many alternatives based on blockchain solutions will start on with stable coins, because if the CBDC infrastructure will be just to do instant payments, and there will not be possibility to do any kind of programmability, interoperability, open ecosystem, etc. I think that what will happen is that there will be many other stable coins based on blockchain infrastructures backed by money in the CBDC, and enabling the programmability that is not enabled by the CBDC infrastructure.
And
who arrives first will be, let me say, the perfect fiat currency or digital currency to be used, and that will be important for the new balance of currencies.
We have about 8 minutes left, and I have to leave a minute for Jessica to leave a closing statement. So rapid fire. Pietro, how can retail and wholesale CBDCs add value to the digital assets ecosystem?
Well, they can bring a legal tender into the ecosystem, right? They can bring something that comes as a liability of the central bank into the digital asset ecosystem. So they can allow the digital asset ecosystem to use some of the properties of that infrastructure. Be it retail, be it wholesale, I see a need for both, an articulation between both. Wholesale for interbank settlement, retail for digital payments from the citizen standpoint. Like core infrastructures, I see a combination of three elements. And then you can decline in scalability, cryptographic security, decentralization, and so on. The three elements of any infrastructure, be it the railways, the internet, the Roman roads, are that they have to be efficient in solving a problem, they have to be accessible, and they have to be secure in some form, right? If a bridge falls under your feet, well, it's not an infrastructure. So in this sense, CBDC can be an important piece of infrastructure.
Great. Marion, well, what is some of the bank's work with CBDCs to date, if you can speak to it all? Some of it might be private.
Yeah, I mean, we are far from being there, to be honest, at least in most advanced economies. But what we clearly know is like the pandemic has clearly accelerated the decline of cash as a mean of payment, and research as well on that topic. In January, Christine Lagarde mentioned that digital euro could be a reality within 5 years. So this is pretty clear that it will be, and it is already a key topic likely to be continued to be discussed, and we should get prepared for it. And the ECB has also just ended its consultation on CBDC, and the banks, along with other stakeholders, have been involved in this consultation process. We have contributed to it. And this is a topic that we monitor both retail and wholesale. Yeah.
Great. So Henry, you're one of the most prominent CBDC researchers in the world, I'd say. How do they fit? Now you're shaking your head. Yes, you are. So how do they fit into the current financial system, and how can they integrate within the digital assets ecosystem?
Well, so I mean, central bank money is already there. So you have cash in your pocket. If that's digitized, then it's integrated. And so the report that I was secretary for, that we published in October, that's the BIS and sort of 7 of the other big central banks. Principle 2 of 3 was it has to be part of the ecosystem. It can't squeeze out cash, can't squeeze out commercial bank money. That would be a bad outcome. That's on the retail side. On the wholesale side, banks, big financial institutions already use central bank money to sort of settle the trades that come from FX and come from securities, blah blah blah. It's now it's now sort of becoming real that the markets are tokenizing. So central banks who are in charge of the settlement are now experimenting with sort of how to deal with that. And so that's what we're working on in the BIS Innovation Hub with a lot of other central banks. Oh, you're muted, Mike.
Oh, thank you, Henry. Great. So we only have about 3 more minutes left. Francisco, really quickly, and then I'll get I think one more question to Pietro. At NTT Data, you've helped move 98 banks into production for the Sputna project. Can you describe that experience quickly? And how did you work with Algorand on it?
Yeah, well, as you can imagine, moving 98 banks in production is a really big challenge, especially because a lot of people think that it is just on the blockchain side, but then you have to think about in the integration side. So how to integrate one blockchain with 98 different systems and different stakeholders. And it's a really big challenge, and at the moment is one of the biggest initiatives for an ecosystem, and it's something that for us is really important, because we created a model. It's not just technology, it's a model on how to collaborate and work as an ecosystem from all the different governance levels. So from technology, from legal point of view, governance, infrastructure, network. So it was a lot of work on all the aspects, and as NTT Data, we supported the 98 banks now in production, handling the million of transactions live that are there. What is really interesting is that experience we are working to move and to replicate also in the CBDC topic. So we started working we are working with the banks, and also to share also with the European Commission and with the different central banks that are working in the CBDC topic, that they have to replicate something that we created. Of course, with commercial banks, they have to do with central banks, but it is a model that can be replicated. And that's really the key point, and what we are working now with the Italian banks, but also with the central banks, sharing this experience with them on replicating this model, sharing also the different infrastructures, like you say, like with the Algorand, so showing the capabilities this infrastructure are able. But that's also one topic. Then there are other hundreds of topics that, for example, governance, many other things that we are sharing with them and trying to share our experience of 3 years of project.
And maybe that's a great closing thing for Pietro. Centralized finance and decentralized finance and Algorand. How does this all kind of fit in together? Is it a false dichotomy, or what are some of the main advantages of the two?
First, let's think a little bit of what's finance. Finance at the end, apart from all the hype, and it's anticipation of future value. So conceptually, it's a pretty simple thing. There are reasons to do it in a centralized manner. Sometimes, not in all occasions. There are reasons to do it in a decentralized manner, not always in some occasions. So the two things actually can coexist, in my opinion. We have, as of today, a way to make a digital representation of any kind of assets, be it money, be it other type of assets, which is blockchain. Let's just leverage it.
Great, thank you. And then Jessica, I believe you have a closing statement. Once again, thank you to all of our panelists, and thank you to BWS as well as Algorand for helping us put this together.
Yes, thank you, Mike, and thank you for the very interesting discussion, everyone. We are very happy that you could join us today. And I just wanted to take a moment to thank Algorand for making the webinar possible. We have a message about Algorand. The Algorand blockchain was created as the world's first pure proof-of-stake foundational blockchain that is accelerating the convergence between decentralized and traditional finance, and it's continually innovating and developing to support the future of finance, or what Algorand has termed FutureFi. Designed for stability, speed, and performance, it has a robust ecosystem of applications, extremely low transaction costs, and speeds of more than 1,000 transactions per second, TPS. Algorand's technology enables a set of high-performing layer 1 blockchains that provide security, scalability, complete transaction finality, built-in privacy, code chains, and advanced smart contracts that are essential in a FutureFi world. Additional focus of the platform is to always innovate around performance, interoperability, public and private networks, as well as layer 2 smart contracts. As we enter into a new economic reality where control is balanced with transparency and inclusivity, organizations are at the forefront of their industries will need to leverage the latest in blockchain and DeFi infrastructure as they redefine finance. This includes key areas which Algorand excels at: simple and cost-effective payment infrastructure, create and deploy tokens, NFTs, stablecoins, securities, and currencies, create new financial tools, protocols, and services. Okay, that was a message about Algorand. Thank you very much to all the panelists. It was a great discussion. Thank you, Mike, for moderating. We really appreciate it. And thanks again, Algorand, for making it possible.
It's our pleasure. Thank you, everybody.
Thank you, everyone.
Thank all the participants.
Thank you
very much, everybody.
Thank you.